Before we study the actual provisions of input tax credit chapter, we need to understand certain definitions. We need to understand certain definitions so that it will be easier for us to understand the chapter. So in this class, we will be studying three definitions. One is taxable supply, one is zero rated supply and exempt supply. First, let us start with taxable supply. This particular definition we already discussed in our class. Taxable supply means the supply on which there is a levy of GST. So in the levy chapter, in our chapter number 3, we studied that on all goods and services there is GST except alcohol and petroleum products. That means if I am supplying any goods and services except alcohol and petroleum products, I am making a taxable supply. So that is the first definition. So what is taxable supply? Taxable supply is nothing but on which there is levy. So on levy is on all goods and services except alcohol and petroleum products. Now let us study zero rated supply. What is zero rated supply? If I ask you what is zero rated supply, one common answer what comes to your mind is zero rated supply is those supplies or those sales on which the rate of tax is zero. You may think like milk, it is taxed at 0%, so it is zero rated supply. This is what most of the student thinks, but they are wrong. Zero rated supply is not those supplies on which GST rate is zero. Zero rated supplies means export supplies or supply to SEZ. Now why it is called as zero rated supply? Let us take an example to understand this. Say there is a person in Maharashtra and his name is Anthony. So there is a person in Maharashtra, his name is Anthony, very hardworking person. Now he wants to export certain products, say luggage bags. So he wants to manufacture luggage bags and export it to Egypt. Now, the cost of the luggage bag is 8 lakh rupees. All the cost of the production is 8 lakh rupees. Plus he will add his profit, say 2 lakh rupees. 8 lakh is the cost plus 2 lakh is his profit. So what is the value? It is 10 lakh rupees. So we understood that GST is on the value of supply. So the Indian government will say he used the resources of Maharashtra. So he has to pay GST on that 10 lakh rupees. Say that they will charge 20% GST. So on 10 lakh how much GST he has to pay? He has to pay 2 lakh. So total value of his luggage bag will become 12 lakh rupees. So if Anthony has to sell this luggage bag in Egypt, he will collect 12 lakh rupees from the customers from Egypt. So this is the first scenario. Say that there is one more person in China. There is one more person in China and he is also manufacturing the same luggage bags. The cost of the luggage bag is 8 lakh rupees. What Anthony's cost of production was. Even in China, cost of production is 8 lakh. Even in India, cost of production is 8 lakh. Even a Chinese is adding 2 lakh rupees profit. Even Anthony is adding 2 lakh rupees profit. But in China, they don't charge GST. That means if this Chinese want to sell in Egypt, at what price he will sell? He will sell for 10 lakh rupees. On the other hand, if Anthony has to sell, he will sell for 12 lakh rupees because he already paid 2 lakh rupees as GST. Now the question is, if there is a customer in Egypt, which product he will buy? Will he buy from Anthony or will he buy from a Chinese? Definitely he will buy from a Chinese because the Chinese products are cheaper. So it is available for 10 lakh whereas Anthony's products are available for 12 lakh. Now the question is why there is a difference? It is because Indian government charged GST whereas Chinese government did not charge GST. Now to avoid these situations, Indian government to promote exports said, if any manufacturer from India wants to export their goods, then on those products there is no GST. If an Indian manufacturer or Indian service providers want to export their goods or services, on that there is no GST. So they called it as zero rated supply. So though he had to pay 20% GST if he was making supply in India, They said you are making supply in Egypt, so you are making an export. That means though there is a 20% rate, you don't have to pay GST because this supply or this sale will be called as zero rated supply. So zero rated supply basically means supply which is made in the course of exports or supplies which is made to SEZ, that is special economic zones. Special economic zones is always treated as a part outside India. That is why if someone is supplying to SEZ, it will also be treated as a foreign country. So what is zero rated supply? A supply which is either an export or is a supply which is made to SEZ. Now one important point and one interesting point that you need to remember is zero rated supply will always be a taxable supply. Now you will say Antony did not pay tax, why still it is called as taxable supply? Because there is a levy on the luggage bags. If Antony is manufacturing luggage bags and if he was selling in India, there would have been GST on that. There is no GST only because he is exporting it. So that does not mean that it is not a taxable supply. So write it down somewhere that zero rated supplies will always be treated as taxable supplies. So there should not be confusion anymore.